I am very excited to welcome Don Durrett back to the show. He is the founder of Gold Stock Data. He provides very astute insights on Twitter, so always informative to hear his thoughts on the market. Welcome, Don.
Hey, Elliot. Thanks for having me on the early investor. I always feel that gold and silver miners are the early investor because, we're investing in stuff that it's kind of visionary. You got to be early. I mean, that's how you make money in miners. You got to get in early and then you wait. I always say that you should not even be investing in gold and silver miners unless you're more than a year out. You should never invest for the short term in miners. I don't believe. You should always be thinking 2, 3, 4, 5 years out, because mining is so slow. It's a very slow thing.
Yeah.
And we're always waiting for gold prices and silver prices to go higher. So yeah, the early investor is, I like your title. It fits me.
Yeah, I love it too. Exactly. Like, just you want to get this stuff as cheap as possible for the long-term vision of a move that we could potentially see happen. So I guess we talked about miners. What scenario do you see that would cause miners to go up?
Oh, wow. That's a loaded question. I mean, I could definitely talk for 10 minutes on that one, but
Yeah.
really what got that's not, and that's how I usually answer these questions. I just go on and on and on about it because, that's the reason I'm in gold, is answering that question. What's going to push miners higher? Why would you do this? Well, yesterday the HUI went under 225, and I believe that, for me, I always use the HUI. I have been using it for 10 years plus as an indicator of when to buy, when to sell, but I don't sell it very much. Mainly when to buy the dips. When do you get a dip? For me, the HUI at 250 is kind of a neutral level. Above 250, I don't really want to buy. And then 225 to 250 is kind of that neutral level. Once you get below 250, it's starting to get juicy, if you will, 240, 230. You get it below 225, and I call that the buy area, kind of your early investor. We went under 225, and then immediately, I think people notice a buy area. Immediately, today it's at 217. I mean, it's kind of a pretty big drop, right? And so I don't think we're going to go much below 200. So this is kind of a good buy to the bottom type of situation. I think we might go 195 to 200, but I'm thinking 195 to 205 is where I'm expecting. So I started buying. This is kind of my buy zone. For instance, I bought, you talk about buying early and thinking long term. I bought a Hummingbird, which is a stock that everybody's ignoring, but they're a 200,000 ounce producer with valuation of $100 million. It's like just silly, cheap valuations. If gold goes to where I think it's going to go to 3,000, their margins are going to be nuts and their valuation should be nuts. These are like 10 baggers. Like, wait a minute, how in the world? Now, I do small allocations. I don't go and gamble on these stocks. I do, 1% or less of my portfolio, usually 0.5% or even lower, 0.25%. And I buy lots of positions, but that's just, an example. The other one that I've added shares to is Vino, which I think is also just crazy, silly, cheap, but they're more of a 3-year, 4-year play. Hummingbird is going to, they're already, 200,000 ounce producer. They're going to just rock and roll. But Vino, they're only they're a small producer, but they're going to be growing production for the next 3 to 5 years. But that's just why did I buy these stocks? Right. That's getting to answer your question. Why is gold going higher?
Right.
And basically it comes down to all the macro fundamentals of the U.S. economy. Now I understand, Europe and China and Japan are not doing great, but for me, it's all about U.S. And the U.S. economy, I've been following this closely since 1980, I think is basically a kind of a broken model, if you will. And so, I mean, if we go back to 2000, when you had the dot-com bubble bust and the stock market crashed pretty hard, and then you had the recession in 2001, and then Bernanke came in and lowered rates and injected money. And at that time, the economy started getting basically a manipulation by the Fed, where the Fed dropped its focus. His focus has always been not so much on making sure the economy grows, but it's basically preventing inflation and make sure people have a job. Those are their two mandates. And it's never really been about managing the economy, if you will. But that's what it became. So when early 2000s, when Bernanke basically created that bubble, he lowered rates too low. He didn't need to. I mean, the economy wasn't crashing. We were in a kind of a mild recession in 2001. But so what, he overdid it. He overdid it. And he created that big bubble in housing. It was awful, right? I mean, then you had the crash in 2007, 8. That was from Bernanke basically printing too much money, lowering rates too much, and just taking on this new mandate of just trying to manage the economy. And then in 2008, I think that is when MMT really took hold. The MMT is this idea that debt doesn't matter. The focus has to be liquidity. So you basically lower rates to zero and you inject money, and you ignore debt. That's kind of the three pillars of MMT. And that's what started in 2008. And then, it just, Yellen came after Bernanke and just kind of kept the same thing in play with zero rates, inject money, and ignore debt. And debt went from 4 trillion in 2004 to today, 32 trillion, went up 8x in less than 20 years. And so that's that whole idea, debt doesn't matter. We can just expand. Now, it's allowed the economy to grow, but simultaneous to that, it's created problems. And this is the reason why gold is going to benefit. I mean, when is it going to benefit? I think the writing is on the wall here. It's because now the Fed doesn't have its tools, and we're kind of in a very dangerous, precarious situation here, because back in 2008, the Fed could lower rates to zero and inject money and not worry about inflation. But the Achilles heel of MMT is inflation. And now everybody's saying, well, inflation's gone, right? Well, they're at 5%, we're at 5.5% rates, and they're not going to lower rates. Well, those high rates actually create inflation, which is kind of bizarre, right? Because the high inflation, it actually, it gives people more money. So you right now, if you have money, put it in a bank, money market, 5% return back. Well, if you're getting 5% return back, you might spend that 5% back, right? And so they're basically making the economy gel. It's actually making the economy kind of stronger. All this added interest, which creates more inflation because people are spending money. So they're trying to kill the economy, but by raising rates, it's not necessarily working. It's actually injecting a lot of money in. So that maybe isn't the right way to do it. The way to do it is suck the life out of the economy is to not print any money. And as soon as the bank, the SVB bank had a problem back in March, they stopped the QT and they immediately started injecting money. And so, yeah, and then look what happened, the economy is basically not died, the whole part of it. So can they stop the Fed's in a precarious situation? Everybody thinks we're going to get this soft landing. Everything's going to be perfect. Inflation is going to go back to 2%. They're going to lower rates. Everything's going to be rosy. But they're really threading the needle here. Can they do it? And I don't think so. I really feel that the fear trade. So the reason why gold's under 1900 today is because the fear trade is softened, and the fear trade is softened. When I say the fear trade is softened, that basically means Wall Street doesn't need to own gold, doesn't want to own gold. So you have the stock market basically trending higher. This week it slowed, but it's basically been on a run, since March. And then you have inflation kind of slowing down, and then you have GDP, which has been strong. So all these indicators of this somewhat strong economy, if you will, I think the overall data says it's not strong. That's put pressure on gold to go down. So the fear trade is softening. But I think in the next 90 days, I think that the economy will roll over. We will begin a recession. The stock market will roll over, and the fear trade will come back and gold will take off. But before that happens, one final thought, I think there's going to be one more sell-off in gold. So some people thought 1900 was going to hold gold. Well, today the spot's under 1900. That didn't happen. And I've been saying no way 1900 holds, and the odds of 1850 holding are very low. And so I'm praying that 1800 holds. And I think it will, because I think the fear trade will come back and it'll get a bid somewhere between 1800 and 1825. That's my best guess.
That is a fascinating analysis, very succinct, very helpful. So you see the economy rolling over, which totally makes sense based on where the data is. So if the economy rolls over, why can't it be like every other time where the Fed just prints money like crazy, boosts the balance sheet, and the stock market pumps? Just like in the pandemic, right? That was the worst time for the economy, but look what happened to the stock market.
Right. Yeah. So this is where people aren't really. I'm glad that question came after my kind of overview of the situation. Has happened since 2000, where you had this debt explosion. So debt has reached such a high level. So we have right now. Interest on our debt this year is going to be about interest payments from the government is going to be about 1 trillion. So it's tripled. It's tripled from 300 billion to a trillion. So what's happening once the and the de-dollarization has started. We don't know how fast that's going to pick up. So the Fed and the U.S. government and the U.S. economy are actually in this very precarious position because of all the high debt. So if the economy starts to go down, the more that they print, the more weakness and risk that they add to the U.S. economy. That debt starts to become a problem. And as it becomes a problem, it becomes harder and harder for them to lower rates, because nobody, especially on the long end, nobody's going to buy a 10-year at 2.5% or a 30-year, at 3% if things are bad and it's risky. It's like, wait a minute. And especially if inflation is a little higher than that. So can they get raised to zero? Probably not, because of this big debt situation. Plus, so it's not as easy as it's been. So I always say that the Fed has been able to be proactive since they came into play, if you will, for the last since 1945. The Fed's been able to do whatever it's wanted to do, be proactive. I submit that now they are in a reactive mode. This is a paradigm shift. And what I mean by reactive is that when they go to print money, they have to think about it. They're like, can we? Can't we? They have to think about it. Can we lower rates? How much? They've never had to even think about this stuff. So it's kind of a precarious, dangerous thing. And so as the economy rolls over, how much money do they have to print to restart it? And then that money that they print, how much inflation will it cause? And so basically we're entering this period of uncertainty it's higher than it's ever really been. And that's going to push gold higher. Uncertainty will. And then you got the de-dollarization, which will also push gold higher. This is why I keep saying gold's going to 3,000, and is because of all of these factors. People think that the Fed is going to get this somewhat perfect landing, perfect scenario where the economy goes back to growing at 2% and inflation's at 2% and everything's rosy again. I just think that has a low probability, maybe 10% chance. The 90% chance that next year, 2024, is literally the worst year in America's history, period, because if things kind of get out of control, then it'll be the beginning of a spiral downward, which is kind of what I'm expecting. And so there's your answer.
Yeah, no, I love unpacking this because it's the most important question anyone looking at financial markets can answer or try to answer. Right. So the Fed, their hands are tied by inflation, but the problem is the bubble is so big that can we sustain a 20% drawdown in stocks? It's such a huge money printed bubble. Is it too big to fail at this point? So will they have to do draconian measures like what Japan did, just buy up their own debt, do the whole Ponzi scheme deal? Will they just have to print money? Because don't they have to choose between depression or debasement at the end of the day? And won't they have to choose that?
Yeah, I like this question because your question basically it kind of encompasses the tough decisions they have to make and the potential, precarious outcomes that could occur. Right? I mean, this is kind of the situation we're heading into, and so if we're heading into this type of a storm, why would you really want to have like 50% or more of your wealth in the stock market? It doesn't make a lot of sense when this is the kind of risk that is actually out there right now. And so people are going to move to gold once that's what next year, I think in 2024, when this risk level, and I call it the fear trade, kind of kicks in. Because what are they going to do? How much are they going to print? We're going to, if we have and I think we are going to, if we have a deep recession, how many companies are going to get bailed out? Which companies will get bailed out? Which ones won't? Which banks will get bailed out? Which ones won't? It's going to be, I think it's going to be worse than 2008. I really do. Because 2008 was actually I think, a lot of people lost money. A lot of people lost their houses, but the economy overall, I mean, if you look at GDP, it was back on its feet, in the spring of 2009. Everything was basically back to normal as far as the economy goes. Now, people lost assets, people lost houses, a lot of people lost money, but the economy on a whole was basically back, the train kept running out, once you got to spring of 2009. This time, I really feel that we're not getting back on the train track, that what's going to happen here is we're basically going to hit a wall next year in 2004, kind of like what Japan hit in 1989. We're basically turning Japanese here. We're going to hit a wall, and we're just going to I call it muddling. We're just going to hit the mud and just get stuck. And there's just going to be no economic growth for the rest of this decade. And then America is going to change. And 2020 was, the two periods that really showed that America is going to change was 2016, when Bernie Sanders basically created the woke movement and changed the whole political system of America. And then 2020, when COVID hit, it was like boom, boom. Those are the first two omens of what's coming to America. And I really believe this is kind of weird, but it's 4-year periods. You got 2016, 2020, and 2024. 2024 is going to be the third shoe to drop. It's weird how it's going in fours like this. I really feel that next summer, a year from now today, we have this conversation, the world is going to be a different place.
Wow. No, that's a very clear picture of where you think things are headed. So then just moving into like you said, asset allocations in hyperinflationary economies, doesn't the stock market go up? So you don't have to comment on Raoul Pal's theory of the exponential age and debasement and how everything, like he pretty much thinks once the printer gets turned on, crypto, tech, the exponential age happens and everything goes up. And is that possible? Because the alternative to that is Japan, where they have the lost decade. So I don't know, could we have a lost decade in stocks, or could we have just a inflated bubble again if they start printing money again? That's the question. It's kind of hard.
Yeah, good question. So the S&P was at 666, and I think the bottom was 2008, and now we're at 4,500. So why wouldn't we crash all the way back down there? Well, the reason we're not going to go all the way down to 1,000 is because of inflation. So this stock market is inflated already. And this is the reason why my target is only 3,000. My target is 3,000 to 3,300 is because of all this inflation that's basically holding it up. Jeremy Grantham thinks that maybe it could go to 2,000. That's kind of his lower end, but his upper end is 3,000. So he's kind of with me thinking that, this inflation can keep the market from crashing, but I think it will go a little below 3,000, maybe 2,800, somewhere in there, possibly 2,500. But I think it will bottom by like spring of next year. I think we hit a bottom, and then that's when the inflation, that's when the money printing will start to pump it up a little bit, push it a little higher. But I don't think we're going to get any type of a Venezuela type of thing or a hyperinflation. I don't think we're getting hyperinflation in this country, and the reason why is because assets are going to actually deflate in many respects. So we're going to get the combination of deflation and inflation. I've always said this. You're going to get deflation in things you own, assets, and inflation in things you want or things you need. And that's what's going to happen. So it's going to offset each other. A lot of people are calling for a deflation. We're in a deflation or bust, because, the economy debt goes down, the economy goes down, you get deflation. Well, the Fed with MMT is going to offset that with a bunch of money printing. They're not going to allow it. They're not going to allow inflation. They'll print. So we're going to get hit from both sides. But the deflationary pressures, I think, on assets will keep the value of companies down to a certain extent. And so you're not going to get this run back. So I'm expecting kind of the same type of Japanese scenario where their stock market, I think at 37,000 in 1989, has never gotten back there. I don't think we're ever going to get back. So we're at 4,800. The high was at 4,800. I don't think we're going to get back there. Some people think we're going to get back there this year. I think we end this year under 4,000. And so next year is a recessionary period. So I don't think we get back there next year. So you're looking at 2025. We'll see, if inflation can push it up, back to an all-time high using inflation in 2025. But I don't think we get an all-time high in this year or next year. One thing I want to say about, inflation, the Fed, printing enough money. The one thing that will create hyperinflation is if the Fed monetizes like 80% of the debt, the government's debt. So the government is currently borrowing $100 billion a month. Let's say that jumps to $200 billion a month. And the Fed's monetizing 80% of it. So they have auctions and the Fed has to go in there and buy 80% of it. That creates hyperinflation because, the Fed is, because they're printing money to do it. Investors aren't buying the bonds. We're printing money to monetize that debt. So if we start monetizing $150 billion a month, that won't work. And they know it. And so what will happen, and I'm basically saying this is the final outcome. I don't think it's going to happen until 2027, maybe 2026. I think that the economy I'm not expecting a collapse. I'm expecting a muddling. So we're not going to get a collapse. So everything's going to kind of just muddle along here and not crash, if you will, or collapse. We're not going to get a depression. But things are going to slowly deteriorate. And then somewhere 2026, 2027, it's going to get bad enough where the scenario I'm talking about, where the Fed has to monetize this debt, these deficits, that they realize that we basically hit a wall. We've hit a wall here. We can't do this anymore because it's just going to destroy the currency and create hyperinflation. So we have to do a reset. So I'm expecting a currency reset in 2027, could happen in 2026. And basically what the reset is going to be is they're going to issue a new dollar. And that new dollar is going to be valued at a 30% decline. So if you own US debt, you're going to lose 30% overnight. That's what they're going to do. They're basically going to devalue the debt, devalue the currency. I'm thinking it's 30%, but maybe it'll be 35 or 40. But that's what I think is going to happen. But the reason why is it's going to have so many benefits for the government to do that. It's going to have a lot of negatives, but one of the benefits is when they do that, they'll go to a digital currency. So when they create the new currency, it'll be digital, and everybody will be screaming. They're like, "We don't have a choice. This is what we have to do," kind of thing. And so the CBDC will just be kind of a test environment, and then instead of a CBDC, I think they're going to create kind of a USDC kind of thing, the United States digital currency. And then you'll have to turn in your dollars, and there's not going to be any more paper money. Paper money will all go bye-bye. It'll all be digital. And so you'll have to, and basically what they'll do is they'll hand out digital wallets. You won't necessarily need a phone. By then, they'll have you'll be able to have a digital wallet on in your hand to buy with. And the government, people, if you need it, those will be easy to come by, if you will. So you won't need money. you won't need cash. You just go get one of those. But bye black market, right? The black market's gone. All that, and the other thing that'll be, the other thing that's going to be great for them is they're going to be able to orphan all those US dollars that are offshore. Because now those dollars have to be turned in to new dollars. And if any of those dollars that are outside our system are basically, criminal based, if you will, they're not going to turn them in. And they're probably going to force them to come to the United States to turn it in. And then they'll maybe tax them or whatever. They're going to make it hard, but because it will create inflation. I mean, the more dollars that come in will create inflation. So they'll probably make it difficult to turn in those dollars. But I think I see some those are the kind of wild scenarios that I see coming.
Wow. The unfortunate thing is it makes so much sense, which is scary because it's not an ideal future in the next few years. And so one of the biggest things you said was that what we want will inflate. So the cost of things we want will be hard, will just go up. So it'll be harder to get good healthcare and whatnot. So the question is, how do we allocate capital so it can go up as fast as the things we want? You definitely talked about gold, but is Bitcoin a suitable replacement for gold or a diversification to gold? Or is there any other asset class that could do as well?
Yeah, my answer is yes. So when Bitcoin first came out, 2010 to 2016, I ignored it because I thought it was private money. And I basically thought to myself, nobody can create private money, digital private money. Bitcoin's private money. Let's face it, that's what it is. I'm like, no way, this isn't going to happen. So I ignored it. And then in I think it was 15 or 16, it went to 1,000. And I said, interesting. That's it. 1,000. Maybe this thing is going to work. So I started following it, and then it crashed down to $250. I said, oh, it's going to zero. This private money's junk. It's going to zero. And then it went to 400. It started rebounding. Went to 400. It went to 400. I started following it. I'm like, is this thing going to go back to 1,000? Is it going to survive? And right in there, right when it was around 400, I decided to do a deep dive. I did no research, zero research. I think a lot of people are this way. I did no research. So I decided one day to do a deep dive on it and check out the technology. And what I found blew my mind, just blew my mind. So I have an IT background. I worked in IT for 20 years. And I was computer programmer the first 5 years, and then I did a lot of analyst stuff after that. And so I understood, the technology. I could read through it, and when I read through it, the thing that blew my mind was that it shouldn't exist. This shouldn't have been possible. This shouldn't be possible. Nobody, and what I mean by it was a miracle that it happened. So I really believe that Satoshi is Lynn Sassaman. I have an article that explains Lynn Sassaman's life. The reason why I think it's Lynn Sassaman is because he basically was an expert in all the technologies. When he was 18 years old in the 1970s, he was on the Internet Task Force, and he was actually giving presentations at 18. This guy was just brilliant genius, dude. I mean, the people he was hanging out with were all college PhD guys. And he lived on the East Coast, and he moved to California, and he worked with Hal Finney. And Hal Finney was the first guy to get a Bitcoin thing. And he was like, and then he was a roommate with the guy that created the Tor. You remember the Tor thing where they had the music thing? He was roommates with that guy. And then they created an email program that was basically very similar to the blockchain. And he was part of that. I mean, he was in all, he had the skill set. He never got married. He was basically a nerd. He was a brilliant programmer. So he moved to California. Then he moved to Europe. This is where it gets really interesting. And he was working at a college in Europe, in Belgium. And so he was using European English. And whoever wrote the white paper used European English. He just fits everything to a bit till. And then on top of that, he was one of these guys. So he was a hacker and a nerd, and he believed in this in freedom and in privacy. He fits everything to a T. I mean, his article on Medium, all about his life, it kind of blew my mind. Oh, and here's the key to it all. He got sick. He had depression. He was on medicine, but he got sick. And when he signed off and did his last email, Lynn Sassaman died 2 months later.
Wow.
Yeah, he fits. He checks every single box. All right, so that's a little history of Lynn Sassaman and Satoshi. So when I read all this, when I was reading it, I was like, "This is a miracle. It shouldn't exist." The reason why I say it shouldn't exist is because number one. It's completely decentralized. When Satoshi created the software, he just put it up on the internet and then he got it up and running. He got a few miners. He actually mined it himself, got it up and running. And there was no governance model. There was no team. There was no organization. And nobody's tried to duplicate what he did. Nobody's done this, what he did. All he did was put the software. So there's two software programs. One is the miner software and the other is the node software. So he puts both of them up there, and then he puts it on GitHub, it was brand new. Now it's huge. Puts it on GitHub, puts the software on there, and he sticks around for about a year, 2009, 10. He sticks around for about a year, and he basically codes and works with the programs, gets the thing a little bit going, and then disappears. So when he walked, the only thing that existed was the software. It's like, have fun, people. No foundation, no organization, but the software. And then here's the thing is that the software was so beautiful, so elegant. So since it's totally decentralized, you can't turn the thing off. It's impossible. And the miracle was the decentralization where nobody could basically gang up and make a change to it. Nobody could control the thing. So nobody can control the thing. There isn't one group like, I don't care how wealthy you are, you still can't control Bitcoin. Nobody in the world can basically try to control it. It's on it. It's basically, it's out there. It's almost like an alien created the thing. They talk about, this AI where you can't unplug it, you can't turn it off. That's Bitcoin. You can't turn the darn thing off. So that's number one. And then number two was he put in this idea to make sure that it survived, which was called the halving. So every 4 years, the number of Bitcoin that gets mined gets cut by 50%. So so all it has to do is survive, because every 4 years it drops by 50%. And this spring is going to drop by another 50%. So what that means is that even if demand drops 50%, the price holds, which is kind of insane. And then in 8 years, it drops 50 and then another 50. So it can, as long as it just survives, it just kind of plugs along. Then you get this drop in demand, right? And plugs along, drops in demand. So, it was kind of brilliant on his part to think of this halving thing. That's why I think it's like a miracle, because everything about it is it's like the perfect currency, if you will. So when I did the deep dive on it, I bought it. And I started on my website. So I sent out emails to everybody going, you guys need to buy some Bitcoin. If this stuff survives, all it has to do is survive. It's going to be hard not to, make money on this thing. And I didn't get any buyers. Nobody wanted to buy it. And it kept going up. A few people, go to 1,000, 2,000. Nobody, it's like, and because everybody had that same mindset as me that you can't create private money. So it's got to go to zero, Don. It's private money. The government will not allow it. Well, guess what? Government doesn't have any say. If the U.S. government, so the biggest risk really is where you live. So in the United States, let's say you live in the U.S. and the federal government basically says Bitcoin's not allowed in the United States anymore. And then you're kind of screwed. But if you live anywhere else in the world, it's like, so what? That's the Americans got screwed. I didn't get screwed. So right now we already have one country, El Salvador, that has it make it as legal tender. Once it gets to 50,000 or higher, you're going to have a couple more countries adopt it. And then more. So we're going to have several countries that adopt Bitcoin as its legal currency. And then the key here is institutions. So we have MicroStrategy, who has several $1 billion in Bitcoin. So every time Bitcoin goes up 20%, they make $1 billion. And it's just sitting on their balance sheet. And so they're really the only one right now, the only big institutional, big corporation that has, this big position over $1 billion. So do you really think that nobody else is going to basically use that same strategy? Just let's buy $1 billion of Bitcoin, throw it on our balance sheet. Apple's got 200 million in cash. Why don't we, or 200 billion in cash, excuse me. Why don't we take 1 billion, put it in Bitcoin, throw it on our balance sheet? If Bitcoin's going to do better than the dollar, Bitcoin's going to go up 20% a year, which I think it will, then why not hold it? So you're going to have more institutions doing the MicroStrategy thing. So I'm as bullish. This is weird. I'm as bullish now at Bitcoin that I was in 2016 when I did my deep dive. Just as bullish, if not more today than I was then. Just because the reason why Bitcoin is going to work and the reason why it's going to survive is because it's needed. If it wasn't needed, it wouldn't happen. But look at all the fiat currencies in the world. They're all kind of debasing. Bitcoin's the opposite. Bitcoin is deflationary. It doesn't debase. Every 4 years, the amount of supply goes down 50%. Well, the amount of new supply goes down. So you need less and less people to want it. And the other thing that's crazy about Bitcoin is that it's ideal for hodling. Hodling basically means you buy it and hold it. The word hodl came because somebody misspelled the word, and they asked him what he's going to do. He said, I'm going to hold, but he put hodl instead of hold. He misspelled it. And so everybody said, everybody started using hodl because you're going to still hodl, and it caught on. Now you call it hodlers, the people that hodl are hodlers. Hodling, and so institutions are going to hodl, investors are going to hodl. I always say that it's stupid to spend Bitcoin. And we learned this early on when somebody, they used 15,000 Bitcoins to buy pizza or something like that. And so that showed you, just think if that person would have kept that 15,000 Bitcoins instead of bought that one pizza. So, it doesn't make a lot of sense to spend Bitcoin. It's the same thing as gold. It doesn't make a lot of sense to spend gold. So you're going to get 70% of Bitcoin that's just hodlers, and maybe 30%, or and you're going to get a lot of traders. A lot of people are going to trade, but big core of Bitcoin is going to be hodlers, which reduces the supply and makes pushes it higher and higher and higher. So my target for Bitcoin is 250,000, which is 5x plus from here, and I think it probably will go higher than that. But once it gets to 100,000, I think it'll get basically full adoption. The governments will all back off. They'll all start, creating the regulations, because once it gets to 100,000, you're just going to have too many people holding it, too many companies, whatever. And the Bitcoin ETF is going to be the key. Once the Bitcoin ETFs get approved, I think it's off to the races. That should happen in the next 6 months. So I'm expecting Bitcoin to drop in the near term, probably down to somewhere between 20 and 24,000 when the stock market crashes. And then that'll be the last correction. Then I think next year in 2024, I expect it to be over 50.
Yeah, that makes so much sense too. Yeah. I mean, also the US government isn't really doing anything to get in the way of it. The SEC is calling it a digital commodity. So there's almost nothing in its path right now stopping it. But the other question is, and the Bitcoin maxis do think that it is a digital gold. That's kind of its name. They think it's going to overtake gold, but it's not anonymous, right? Gold is anonymous. You can make an anonymous transaction, but with Bitcoin, isn't it just an open book for the government to read every single transaction should it want to?
Yeah, that's the reason why they made it illegal. They have something where you can actually hide your transactions. It's called a mixer, right? They
Right.
made that mixer legal for that
Okay.
reason. So yeah, if you yeah, they've actually been able to find, audit these transactions all the way back to people, and they've been really good at that because the ledger basically does it is public, and the transactions are public.
Yeah.
So yeah, but I don't think you should spend your Bitcoin. But and there are a lot of anonymous cryptos out there. So what if you want to be, your actual you want your life to be private, if you will, instead
Yeah.
of people knowing everything you purchase. There are private coins out there, and
Yeah.
so don't Bitcoin. So what if it isn't private? I'm just going to hold it anyway. I'm just going to
Right.
stick it in because you're going to sit there.
Yeah.
But
No.
the one thing is though you do need, in order to track back to a person, you need to have that original transaction. And so a lot, like if Coinbase, if they might give that to the government, but they're not necessarily, a hacker's not necessarily going to, find out. It's really the lack of anonymity is really from going to the government, because the government can go and they can see that original transaction, who made it, and then they can follow that money.
Yeah.
That's what they do. That's how they basically how they've been very successful,
Right.
tracking down some criminals that did a Bitcoin transaction. You got to have that original transaction.
Gotcha. Yeah, that makes sense, and why the government might not be opposed to it. Okay, we covered so much. Just want to end on, going a little deeper into crypto, because what outperforms Bitcoin, Ethereum, and then some of the altcoins. So what does it all mean? What does this scenario, the macroeconomic scenario and Bitcoin, mean for HBAR and Ethereum?
Oh, great final question. So, I've come up with this idea. I've tweeted about it, which is a crypto digital financial system. And so that system, if you will, that digital financial system is a private financial system that exists outside of public money. So you basically have this public money financial system, which we're all part of, and then you have this private one that's outside of it. And I don't believe that Bitcoin can create that financial system, because it takes too much time to do any development on it to make it purely Bitcoin. So anything that's built on Bitcoin, if you will, inevitably starts in needing, if you will, these altcoins. You can't just only use Bitcoin, in my view, because you need these projects, and if you need a project, people are going to spend money on it. They're going to create their own token, and so Bitcoin also is not a smart contract platform. Some people say it is, but I personally don't think that it's flexible enough to compete with all these other smart contract platforms. So what I think is going to happen is, I don't think that Bitcoin, and a lot of people say Bitcoin isn't crypto, if you will, everything else is crypto. So I don't think that Bitcoin really has anything in common with all these alts. And the reason why I don't think it has anything in common with them is I think that the Bitcoin use case is different. And its use case is really as basically a store of value built on this idea that nobody can touch it, and the security model is better than the other security models. So I see Bitcoin more of kind of a foundational coin that kind of holds the whole thing up. It doesn't have to necessarily be connected to these other projects, but it holds them up kind of as a floor, a grounding, base layer. It just sits underneath them and creates this value. It's like the dollar sits underneath the financial system, if you will. It's just there to, for instance, bonds. Bonds are not, I mean, you might get paid in, dollars and interest, but bonds are like a corporate bond, you can create a corporate bond because the dollar exists. Something like that's not a really great analogy, but this secondary private crypto financial system, I think the heart of it all are these smart contracts. And smart contracts have such huge potential that I don't think we can stop it. And matter of fact, I actually think the smart contracts have more potential than, say, Bitcoin. So let's say Bitcoin has a value of 3 trillion, if you will. It's currently about over 500 billion. So let's say it goes up 5x, 3 trillion, right? I actually think the smart contracts are going to be worth more than that, 5, 6, 7. And the reason why is because the smart contracts have the use cases. I mean, Bitcoin can actually be used transactional currency, right? So its use cases is store of value, but these smart contracts can be used for anything in business. And here's just one scenario. And people are doing it now, but we haven't really gotten to the point where people are comfortable. And it's basically private banking. So let's say that you are kind of you're somewhat well off. Let's say that you have $500,000 in Bitcoin, and you are a business owner, and your business needs, say, and you're cash low, and you have to borrow money from the bank, and your business needs like $50,000 a month in cash, in your receivables, and just to operate. You're constantly needing cash to operate. You're running low, so you have to basically do a line of credit from the bank, right? And so you got to go into the bank. You got to basically, they got to vet you out, and then you got to pay the interest, and you got to, make the deal, whatever. Maybe now that's one scenario. And then maybe you put your house up for leverage, you put or for collateral, or you put your business up for collateral. So that's the current scenario. Now, in the smart contract scenario, if you have, let's say you have $500,000 in Bitcoin, you don't have to do any paperwork. All you do is go in there and say, I want to borrow 50 grand in cash. And here is my collateral in Bitcoin. And you basically transfer your collateral in Bitcoin in, they transfer you back, fiat cash, and you got your cash. And then that smart contract, they're not going to steal your Bitcoin. It's going to stay there. Well, this is where you have to trust that company is not going to go bankrupt, because maybe the bankruptcy court will lock it up and you can't get it out. Their servers go down or whatever. So in the future, I think you'll be comfortable with this type of a deal, trade, if you will. So you basically send that in. 5 minutes later, you get cash. In other words, you can borrow money in 5 minutes. Sit down at the computer. Okay, here's my Bitcoin. Give me my cash. Boom, I got my cash that fast. Then, the way the smart contract works is, let's say that you have to pay them back on a monthly basis, and you get paid an interest rate. And if you're late, then you get fees, right? And it's all built in. Okay, if you don't pay on time, but if you pay on time, once you pay it off, you get your Bitcoin back, right? The smart contract releases. Into that scenario, if you have Bitcoin as collateral, why would you go to a bank? It's the same thing with a car, car loan, right? It's like, I'm going to use my Bitcoin as collateral to get cash to buy my car. And then once I pay my loan back, I get my Bitcoin back. I don't have to go to a bank. I do it all myself. And that is just one scenario. That is one type. There are so many use cases they can do with smart contracts. Another perfect example, and we'll end it here, is like, let's say that you're a business and you're making stuff and you have deals with contractors or whatever, and you basically set up a smart contract. You don't have to deal with the bank. You basically, you put your money in a smart contract, and this other company, once they send stuff to you, it automatically moves the money from your wallet into their wallet. It's all automated. No bank, no fees. And you can do this cross borders, which is a pain in the butt right now. So you can do it cross borders. So that's what smart contracts can do. And so I don't see that not working. So I see this digital financial system. It already exists today. It's slowly growing, slowly, methodically. Like the scenarios that I just mentioned are already happening, just on a small scale.
That's so brilliant, revolutionary technology. Wow, thank you for that. I'm gonna have to go rewatch this. But where can people go to find more of you and learn more? And if you have an upcoming book or anything exciting, please let us know.
Yeah, so if they own any gold or silver mining stocks, they want to go to my website and check it out. Also, they want to read my book. So I wrote a book on how to invest in gold, silver miners. It's the best one out there. It's basically a textbook, and it's on Amazon. And then follow me on Twitter at Don Durrett.